please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Welcome back. Well, the global setup this morning is looking quite okay, and in fact the SGX Nifty, after two back-to-back century days on the Nifty, is indicating that we'll have another positive start. Let's see, the premium shrunk on Friday, so is this just that expansion of premium, or is the market going to have that kind of start? We'll find out soon enough. Ashwani Gujral, Sudarshan Sukhani and Mitessh Thakkar now join us this morning. Good morning, gentlemen. Ashwani, what's the call today? At what point do you want to buy the index?
Well, good morning. Today, you have resistance almost where the SGX is right now. So that's like 10,320, 340. There's a bit of a congestion there. And given that now you had strong rallies for 2 days, I think you could have a sideways day, which means that buying the early morning gap up may not work as well. Now, this is a probability, and the probability is strongly in favor of the gap up not working. So the trade I am interested in taking is to let everybody get in and the market to fail in the second half and then give you a decline. So maybe that plays out, maybe that doesn't, but that's my scenario for the day, that I don't want to buy the gap up on Nifty or the Bank Nifty. The Bank Nifty has a similar congestion at about 25,500. So what happens on such days is that early morning you have a flourish, but middle of the day the market starts to come off. And that was clear with the Bank Nifty premium coming down to as low as 20 points. So there is probably some profit booking at higher levels.
Okay, some profit booking at higher levels is what Ashwani is expecting to see. So he won't want to buy the gap up. Sudarshan Sukhani and Mitessh Thakkar are also with us. Sudarshan, hi, good morning. Last week you had indicated that you have a bullish bias and the trend eventually was on the upside. Are you getting a similar feeling this week as well?
Yeah, good morning. Last week was a dream week. On Thursday morning, we went long almost at the lows of the correction at somewhere around 10,070. And now the Nifty is likely to be 10,300 in just 2 days. This is as good as it gets. It's quite possible that after two back-to-back rallies, the markets may pause and consolidate, but the trend is up. So for people who went long last week, any time on Thursday, Friday, even Wednesday, this is a good time to take off some of your profits, step aside. There will be re-entry opportunities perhaps in the next 1 or 2 days, maybe before Gujarat exit polls. The markets may give a shakeout on the downside. But if there is a dip, so the view is take profits, wait again for either a consolidation or a dip, and go and buy the Nifty irrespective of any news events. So the bullishness continues. As a matter of tactics, we want to take some money off the table and re-enter the market on a dip.
Okay, fair enough. Mitessh, good morning. How would you approach the day?
Good morning, Anuj. So I think possibly I was one of the last guys to get long for some time on Friday morning. But I would agree with most of the observations that the trend is on the upside on the short term at least. And today morning gap up would not be a buying opportunity. I think 10,200 is a very strong support zone, 10,350 or thereabouts. When we started falling, there was some kind of gap down. So as we approach 10,330, 340, I think that will be time when I would suggest taking profits on the long positions, wait for that dip to happen and then buy into the dip. So 10,330, 340 or thereabouts, the first thing which we'll do possibly is to take profits in long positions and wait for a pullback.
Okay. Ashwani, before we discuss stocks, just want to revisit your index strategies. You're saying that you would want to wait for the first sort of rally to fail and then again is the trade to buy the decline?
See, today my trade is to sell into the rally, but that selling will happen say closer to 12 o'clock, 12:30, when everybody is kind of in and the market starts to fail, because you don't want to short into a market that's screaming on the upside and then get into a drawdown. So you wait patiently. Today there will be chances are two trends, one from 9 to 12:30 and the other from 12:30 to 3:30. So I'm interested in the second half.
Okay, well, let's start talking about some stocks. Ashwani, you don't have any large caps on your list today, so that I guess, you know, talks about the view of the day. Pidilite is there, but apart from that, mostly mid caps today?
See, mid caps generally are doing much better than large caps, and today large caps are expected to be sideways, so individual mid caps will do well. Sonata Software, that is along with Hexaware, one of the best mid-cap IT stocks. That's a buy with a stop of 233, target of 248. Bombay Dyeing has restarted its upside ways, so that's a buy with a stop of 225, target of 242. EC Jeweler is a buy with a stop of 410, target of 435. Piramal Enterprise is a buy with a stop of 2850, target of 2970. And Pidilite Industries is a buy with a stop of 880, target of 930.
Okay, so that's on Ashwini's list, all 5 buys. Sudarshan, good morning. You also have mid caps, but you have 4 buys and 1 sell.
Well, yes, good morning. I have mid caps because the sense is that the Nifty could consolidate or it could inch upward. So large caps may be part of that consolidation. They have to be. We start with Ashok Leyland. That deep correction in Ashok Leyland is over. A trading range is now in development, and that should break on the upside. That's the assumption. That's the buying opportunity. It's all buys that I'm discussing. Bharat Financial has a dream chart, a long consolidation that has taken the shape of a bullish breakout. It's on the verge of breaking out. It's not just a swing trade. It's a day trade, swing trade, as well as a positional buy. You could actually buy the equity and hold on. There's a very attractive, impressive bullish chart there. Then we have Colgate. Colgate's decline is now over. For the last 1.5 months, it's in a trading range. It had a handsome rally on Friday. That should bring it above the range and see a sustained up move. FMCG is a favored sector at this point in any case. So Colgate is a buy. And finally, Tata Chemicals. Tata Chemicals never corrected. It just went into a consolidation. In a sense, that consolidation was a correction. It's now willing to break up and move ahead. Again, a momentum buying opportunity. So primarily the focus is to buy these consolidations and dips. IRB Infra is the sole short sell. The stock has reacted to news, is falling day after day. So probably there's nothing there to buy. It is a short sell, but keep it intraday.
Okay, let's go across to Mitessh as well. Mitessh, I notice in your list today you have a sell on Jet. There's actually a big upgrade that has come in on Jet this morning from Edelweiss, but you would still sell it today. And what else is on your list?
No. So I think very clearly, you know, if you see that the morning action is against your trend, then you don't need to take the trade. But what happened on Friday was there's some kind of gap breakdown. So I was looking at more pullback happening over here to about 640 odd levels. Maybe, you know, that will be negated for the timing. So we just wait and watch and then take the trade. For the timing, I have a buy on Axis Bank. Intraday charts were good on Friday. Some reversal there. So buy with a stop at 537.5 for targets of 555. Dabur is a buy with a stop at 345. Look for targets close to about 362 over there. Divi's Lab, which has been sideways for a number of weeks now, I think is now showing signs of an upside break. So buy with a stop at 1029. Look for targets of 1095. And also buy on MRF tires. That's a buy with a stop at 67,500 for targets close to about 69,500.
Okay, Ashwani, finally on the bank Nifty, we saw a big move on HDFC Bank on Friday, and even others started to participate. This morning, in terms of individual components of bank Nifty, what should be the strategy?
See, PSU banks are kind of lagging. So both ICICI and HDFC Bank have had their large moves. But the issue for me is that why did the premium come off? So there is something that, you know, probably the bank Nifty is heading into consolidation. So that way, I think even large components will consolidate, but maybe the smaller banks like Karnataka Bank, DCB, etc., they will take up the slack. But for the day, I think, you know, the financials have had a big enough rally since the policy day. So probably time to cool off a bit.
Okay, well, we'll come back to you guys for more stock ideas. But for now, let's move on. The SEBI has floated a consultation paper for feedback on allowing the entry of mutual funds and portfolio management services into the 14-year-old commodity derivatives market. Mrugang Paranjpe, the MD and CEO of MCX, joins us now to chat about that. Mrugank, it's been a good 2017. In fact, options and alternative investment funds were introduced, and SEBI is now getting ready for the increased presence of institutional investors as well. Tell us, what exactly should investors expect from 2018?
I would absolutely agree. This is clearly a great step in the right direction. Ever since the commodities markets came under the fold of SEBI, SEBI has charted out a sort of 3-year roadmap which included expansion of the products, it included expansion of the participants, it included expansion of distribution, and SEBI has really been going about all of these in a very methodical manner. We saw a white paper on AIFs which were allowed later on, and this therefore is an extremely welcome step. At the same time, we should also remember that the Indian investing public at large has also really been investing into the equity markets using the mutual funds as a route, and the SIPs have really become a big part of the investments today. So if we all want to take the commodities market to the next level, we have to make sure that we actually embrace these new instruments, make sure that mutual funds and PMS providers can use commodity markets effectively so that we can get real depth and real retail participation going in the commodities market.
Good morning, Mrugank. How prepared is the exchange for higher number of new participants?
We've seen a very consistent trend with the way SEBI has been introducing some of these measures in the market. Typically, there is a very wide consultation which happens and almost all stakeholders are met before even such a white paper is sort of released to the market. So I think that's the process that SEBI has done when we had the launch of options. That's the process which happened for AIFs. That's the process which has happened now. Now, I think from here onward, it's a very set timeline. I guess there's a couple of weeks which SEBI normally gives for actually going through all the feedback that they get. And then the last 2 times, it made it to the SEBI board agenda at the next available meeting. So I would think that in the last quarter of the financial year, this will definitely get approved and become a reality in terms of SEBI allowing mutual funds. Of course, like we saw in the case of options and AIFs, etc., the next step will then be for the manufacturers, the mutual funds, the PMS providers, their custodians, the exchanges to really work towards getting the products ready. So a mutual fund entering the market is probably a Q1 FY 18-19 reality.
So what is your estimates in terms of volume and growth?
There are various aspects in which we have to see whether we are ready and then assess what sort of value or volume impact will happen. In terms of readiness, I think the entire robustness of clearing, settlement, risk management systems, absolutely there. In terms of volumes, if they were to go up in terms of trading volumes, absolutely there. I think at some point of time, some mutual funds might want to have a clearing corporation in place. We are very happy that we should be able to match that timeline. We are very confident that we will be able to have our clearing corporation go live in time for the launch of mutual funds or PMS providers. I think that would be sort of the infrastructural requirement that we're looking at. In terms of a impact in terms of volumes, etc., and I think this is one place where I know, and being sort of an interested party myself, as much as I would love to see the volumes rise immediately on day one, we should not forget the time it has taken all of us, the amount of sweat that people have really done in terms of getting the retail and equity participations up. So it's been like a 15-year journey for us, for options to reach where they have reached, for SIPs to reach where they have reached. So I think in that sense, while it will be a great beginning, to really see the impact, it will probably take a couple of quarters before we really start seeing mutual funds and PMS providers come in.
Okay, and finally, where will the future growth come from?
So I think we had an extremely enthusiastic response to the launch of the product, and what was really very heartening to see was during the entire first contract that we had, the open interest was building up right till the end. So this was a very, very reassuring fact for us that people were increasing their participation, open interest kept going up. The third thing which we were really happy about was that the whole sort of closure of the contract, devolvement as we said, the fact that we would have 2 or 3 new features coming in which the market had not seen. So a pre-expiry margin being levied, people actually taking their devolvement and determining whether they want to exercise, not exercise, and then actually devolvement happening into the futures. We had an absolutely seamless and smooth sort of maturity of the first options contract. So it's been a really great first contract for us in terms of the way the whole process, the whole risk management has worked. In terms of participation, we are at a good number. Definitely we would like to be at a much larger number, but I think again, like I said, we need to keep that in mind, looking at how all the other products in India have done in the past as well. So if we calibrate our expectations according to that, I think we are doing very well currently with the way gold options are. And we had a recent discussion along with our members of the board, and again that's something which we will continue to focus on to make sure that we can increase the overall turnover in the options contract.
Head into this morning with some positive cues from across the globe. The SGX Nifty has actually picked up some pace now, and we had a great week last week. We started off in the red, but we ended with gains of 1.5%. So let's see how this week shapes up. For now, we have Sanjeev Bhasin of IIFL who joins in to give us his views on a lot of stocks that are in the news this week. Sanjeev, hi, good morning. I want to start off with Jet Airways because despite the numbers, there have been a lot of upgrades that have come in on the stock. There were positive takeaways from the analyst meet as well. How would you react to the earnings and the stock price now?
Yeah, hi, good morning. So Sonia, I think the whole aviation industry is under a bit of re-rating on the upside, and despite the elevation in crude prices and some weak results from Jet, the stocks have found favor on any decline. So there's a re-rating on the process that we've seen volume growth being the key standpoint, and there is expectation that margins should start to stabilize with slight bit of a tepid increase in the next 2 quarters. This is being touted as a very rebound and a very strong sector to be in 2018 on the back of the wealth effect, the corporate spending and so on. And the valuation discount which Jet was getting because to Indigo, I think that has narrowed down. So in the real realm, I think that you will have to discount the earnings for another 1 more quarter. But the management has guided that come the second quarter of 2018, they should be able to see a strong rebound in both margins and volumes.
Sanjeev, good morning. The other stock that I want to discuss with you is IRB Infra. It's had a bit of an issue of late and has corrected, but fundamentally, I mean, a lot of people believe it's among the cheapest stocks in infra. Do you want to take the risk and buy, or would you avoid the stock?
Yeah, so unfortunately, Anuj, even though road builders are the flavor of the recent times, this stock has definitely underperformed, and recent developments have left a sour taste in the mouth of most investors. However, if you are looking for a longer term view, then you will have to ignore the short term blips, because I think that the next thrust of the government on the back that if we do get a positive verdict in Gujarat should be elevated capital spending on both ports, infra and roads. And given the valuation, given the type of order book it sees, and given the business, it seems to be a very key stock at this 200 levels. So I would say you will have to look slightly longer term and ignore the near term rhetorics, but or alternatively you can place your bets in the likes of Siemens, Sadbhav Engineering and L&T, all in that space which may gain on other verticals.
Okay, well, we'll come back to you. You mentioned a couple of stocks like Sadbhav Engineering, etc. But before that, let's also talk about what's happening in the commodities space. There's the Bitcoin futures launch, so everyone's talking about that. Manisha Gupta joins in to give us her views. Hi Manisha, good morning.
Morning, and thank you so much for that, Sonia. Starting with Bitcoin, since you mentioned that, is looking at good volumes. But since the traffic is so much, CBOI also has put out a statement saying that the trades are slow, and we've seen those concerns actually come in. But the volume, of course, seems to be picking up, and the Bitcoin prices in the meanwhile are back above 17,000 after hitting below 15,000 early in the Asian markets today. But the other commodities clearly are not having such a good run. It is the year-end profit-taking, the strength in US dollar, and the US non-farm payroll data on Friday came in much better than what the street were estimating, and that is putting pressure on commodities. So the crude oil prices have started Asia 0.5% on the lower side. Apart from the US dollar, it is also about the US rig count, which has been rising. You have seen statements from Kuwait saying that they are looking at an exit strategy possibility by the month of June 2018, and that hasn't really worked very well for the prices here. In the metal space as well, while the China export-import data has been positive, and that could be a bit of a support, but everything else really has been pulling prices down. The last week was the worst weekly decline that we have seen in metal since the month of March. You have the copper prices trading at a 2-month lows, nickel as well. Aluminum is trading at a 4-month lows as well. The gold and silver prices are trading at a 5-month lows. So there is really no place to hide. Most of the commodities trading in the weaker side.
Okay. Manisha, thanks a lot for that. All these WhatsApp groups, Bitcoins are getting discussed. This morning when I woke up, I got a message that the Bitcoin correction is over. I said, sorry, what correction? He said, while you were sleeping, there was this correction in Bitcoin. It lasted for 2 hours. That's over, and now this, it's moving up again. It's crazy, really.
It is, it's crazy. But I just want to delve a little deeper in this. Now that futures have started on Bitcoins, does that signal greater mainstream acceptance of this currency?
Oh yes, I think that's for sure, Sonia. It's when it was launched, it was obviously parallel currency. Now that you have it on the exchange, you are giving it legitimacy, right?
Exactly.
Some sort of legitimacy. I think the other fascinating story, we've all seen the social network, right? And the Winklevoss brothers, they are the ones who are the richest now. They are the ones who have the highest amount of Bitcoins. So that's been fascinating.
Okay, we will in fact talk about Bitcoins in greater detail. Anuj and I caught up with one of the biggest foreign investors in India, Mark Mobius of Templeton Emerging Market Group. He expects the Bitcoin bubble to burst anytime soon. He also expects the Indian markets to head 20% higher from here. In fact, India tops his list of preferred markets in 2018.
I was telling a youngster who was trading in Bitcoin, I said, Bitcoin is giving tulips a bad name. Oh, there's a bubble brewing. In fact, just today it went up again. Yes. I mean, there's no question it's a bubble brewing. But, you have to wait. Usually bull markets or bubbles end in euphoria. When everybody is euphoric about the particular market you're talking about. And we have, like us, are kind of skeptical, Yes. It's when we start trading in this, that's when you're going to see the bubble burst. We're now midway through a bull market, which will continue into 2018, 2019. 2007, if you look at any of the indices, emerging market indices, you'll see that we're now below that high in 2007. And we could see about a 20% excess above that 2007 high. So we've got a ways to go. Changes are quite remarkable, mainly brought on by the internet and smartphones. The technology that's being introduced into India by the mass of the Indian population is having a big impact on every company. Every company has to pay attention to what's happening in that space. I met Reliance not as to do an in-depth analysis, but just to get an idea of how things were going with their cell phone business and with the 3G, 4G, and all the other iterations that are taking place in that space. Telecoms, it's now becoming data comms, you might say, in the sense that it's not only speaking on the phone, but it's the tremendous amount of data that's being pushed through these pipes. And the use of that data is going to have tremendous implications in every field, whether it be medical, financial, social, you just name it, and we're in that situation where things are changing very rapidly.
Okay, that's Mark Mobius's view. Sanjeev Bhasin is still with us. Sanjeev, the other remarkable stock has been Maruti. In fact, it's now the 6th largest market cap company with a market cap higher than HDFC, State Bank, Infosys, ICICI. Phenomenal the way that stock has moved up. And it's sort of defied every logic over the last 6 months or 12 months in terms of, whether there should be a correction. But at 9,000, what's the call here?
Well, Anuj, all pessimists have been left way by, and this stock has just continued to make new highs. On the back that I think the fundamentals are the strongest, the new launches, the acceptance in the local market, and some of the yen-dollar equation playing out positively. The yen-rupee. Now at 275 lakh crore market cap, it's difficult to judge a buy over here. But Anuj, Reliance, Maruti, Hindustan Lever, and HDFC Bank. These have been the 4 pillars, and if you have bought any of these on any dips, you've tended to be surprised on the upside. So as long as the going is good, definitely Maruti stands out, head and shoulders above all. But on a valuation basis, I would put my money for 2018 on Tata Motors. It could be a dark horse. We think the CV sales locally have started to show a lot of traction, and the JLR numbers are going to surprise on the upside, both in Europe and China.
Okay, that's fair enough. Ashwani, Maruti, how to trade this stock, or is it just one of the stocks that you buy and forget and not trade much?
Well, first of all, you should know how to trade. Okay, so the idea is each time it gets towards the 20-day moving average, it has very minor 5-7% type corrections. That's the time to buy. People who have it from 6,000, 5,000, 7,000, they just need to carry on with the stock, because apparently it's making new highs. As stocks make more new highs, the technical theory is that there are less and less sellers. So till that continues, I think it could even get to 10,000. There shouldn't be any problem.
Okay, I guess all stock market investors love companies that keep it with the times and reinvent themselves, right? I mean, Maruti has done just that with its latest electric vehicle tie-ups with Denso and Toshiba. They are making sure that they stay in the game when the game changes over the years.
Yes, and phenomenal. We've been tracking the Maruti story for longest, Sonia. So many, doubts were there, starting with that Gujarat plant. Then, how yen is moving, competition. A lot of people said, where are the roads in India? How, so many vehicles will be there. And just streamrolled through all of that. And I mean, from 5,000 to 9,000 in a matter of less than 11 months. And
not only Maruti, all the auto ancillaries that support Maruti, have also done so well. In fact, Sanjeev, I wanted to get your views in on that. We have some phenomenal moves in so many auto ancillaries, especially the non-index large caps. Anything that you still like there?
Yeah, so 3 stocks, Motherson Sumi has been an outperformer. We continue to think that will be one of the bigger beneficiaries. We've been bullish on a stock called Suprajit Engineering, again in the OEM space, but that's more related to two-wheelers, and it has almost a 65% in the clutch market over there, and it's expanding into four-wheelers and the smart city. The stock has been an outperformer. We still think any decline will be a buying opportunity after the recent merger with Phoenix Lamp, which again plays on the Halonix market. The third would be Exide Industries. It got beaten down because of lower than expected margins in the last quarter, but that was because of the recent launch of a lot of new products which they have launched. And I think the duopoly between Amar Raja and Exide should be re-rated on the upside, given the advent of battery vehicles and the slowdown which we've seen now in lead prices, which should add definitely to the margins. So Motherson, Suprajit and Exide would be 3 of our topics over there.
Okay, Sanjeev, stay on. We have a couple of more questions for you. But before that, Hemant Thakrar also joins us from Aditya Birla Money. Hemant, good morning. Start of a fresh week, of course. So we'll have a lot of trading ideas. First, your thoughts on the index. How would you trade it?
See, good morning, Anuj. Anuj, the way market has now rebounded and crossed above 10,200, it clearly shows that it is more than a pullback rally, because we were all expecting 10,000 to hold and rebound till 10,200. More importantly for me, the way the put call ratio has rebounded back from 1.01 to 1.22 As a result, you have seen that 10,200 call has completely been unwidened and replaced by the put writers. So now we feel that market has more room on the upside. So we are expecting a range that is to be tested, that is 10,350 to 10,400. So that is the next range we expect. Until now market holds 10,200, we are recommending it to buy on dips. So we feel that 10,350 to 10,400 should be tested within this week.
And any stock ideas that you have for the day, Hemant?
Yeah, we are recommending two stock ideas. One is stock from media, that is Sun TV, where the open interest added up 11%. More importantly, the stock has managed to cross that 880, 885 zone, which was acting as a stiff resistance for Sun TV, and cash volumes were also on a very high side. So we feel this momentum will continue. In fact, we feel that Sun TV should be testing previous all-time highs. So we are giving a call on Sun TV, keeping a stop loss of 885 and a target of 930. Previous all-time highs were 940. The second is what we are recommending is within the OMC pack. We feel that OMC saw a lot of good open interest built up on Friday, and we feel this momentum will continue, especially BPCL. Two factors: one, open interest that I have discussed, 4% fresh added up. More importantly, 500 put writers getting active, which is telling me that base has shifted up. So we are keeping a stop loss of 503, and we expect a target of 527 to 528, which is the next resistance zone for BPCL.
Okay, thanks a lot for that, Hemant. That's some F&O ideas. Ruchira Papers is a stock which was quite interesting on Friday. In fact, the entire paper sector, Ruchira Paper has gained 70% for the year so far. The buzz in the industry is that China had banned making paper from waste pulp, which would benefit Indian paper companies. S.C. Garg, chairman of Ruchira Papers, is with us now. Mr. Garg, good morning. Would that be a right assumption that because of this Chinese issue, Indian companies should benefit?
Yeah, definitely should benefit, because due to pollution they have closed their pulp sections. So that is why there is volatile, and the paper has started exporting to China.
So on ground, if you could give us some numbers on how it has helped the Indian industry and your company in particular?
We had actually exported only 1,000 ton of kraft paper last month. So still there is so many inquiries are there for purchase of the kraft paper. So I think these things should finalize now in this, because up to from 15th December onwards, the industry will be opening. So there is a lot of queries regarding the purchase of the paper from India.
Okay, that's interesting. So you said that China has closed their pulp section production because of pollution, but did this happen recently, or was it something that was imposed about 2-3 months back?
Yeah, around 2 months back.
Okay, so since then, there's been an export for you of around 1,000 tons. So over the next, say, 3 to 6 months, what could be a reasonable assumption of what exports you could do to China?
I think 1,000 tons per month we can export from my factory, my industry, from my factory. So we don't have surplus material also. We cannot, because we had to, our regular customers, we have to meet their demand. So we cannot export more than 1,000 tons. Because otherwise we shall be out of local market. So we had to be in the local market also.
So what would this lead to, even if you do 1,000 tons per month, including local and exports, what would this lead to in terms of revenue growth? I mean, first half was good for you, about 11% growth. Is that something that you can replicate or perhaps even do better in the second half?
Excuse me, I tell you one thing, that the paper industry is such an industry which has a limited manufacturing capacity. It cannot increase its capacity by if it has more orders. So we can only increase certain rates, only percentage of rates will be better, realization can be better. Otherwise production will be the same. Cannot increase the production by only having more orders. The production will be the same.
Okay.
Our target this year is around 1,24,000 ton production. We hope to achieve that. Last year it was 1,16,000. So we hope to achieve 1,24,000 to 25,000 tons this year.
Okay. Yeah.